Okay, so something pretty big happened on August 14th, 2025. Equinox Gold had their Q2 earnings call, and the market, well, it went wild. The reaction was just immediate and, frankly, pretty powerful. So in this explainer, we're going to break down exactly what they said, what the numbers were, and why it lit such a fire under the company's stock. Let's get right into it.
First things first, let's just look at the effect, right? We'll get to the cause in a minute. The market didn't just kind of nod along with Equinox's results. No, it gave them a massive, roaring standing ovation, and it was all written in stock tickers and trading volume.
And here it is, the big one, a 14% surge. And this wasn't some slow, gradual climb over the day. Nope, this happened within about an hour of the call starting. It was just an explosive reaction. So the big question is, what on earth fueled that fire?
Now this is where it gets really interesting. It wasn't just the price. Look at the volume. We're talking about almost 3 times the average number of shares trading hands. This tells you it wasn't just a few people buying in. This was a high conviction move. A huge wave of investors piling in, signaling a major shift in how they see this company.
All right, so let's pull back the curtain and look at the hard numbers that got everybody so excited. This whole market reaction, it was a direct response to a financial performance that didn't just meet expectations, it absolutely blew them out of the water.
Here is the headline number, the one that made everyone sit up and pay attention. Wall Street analysts, the folks who do this for a living, they were expecting about 3 cents per share in adjusted earnings. Equinox delivered 11 cents. That is more than triple what was expected. You just don't see beats like that every day.
And it wasn't just a one-off thing. The whole report was solid. Revenue was almost $479 million. That's up a staggering 77% from last year. Gold production jumped by nearly 50%, and they were selling all that gold for a really strong price, over $3,200 an ounce. Now that last number, AISC, that's the all-in sustaining cost, basically what it costs to get 1 ounce of gold out of the ground. We're going to circle back to that because it's super important. But for now, just know these are the kinds of powerful numbers that get investors hitting the buy button.
So, you have to ask, where did all this incredible growth come from? Well, it wasn't an accident. It's actually the result of a really focused strategy centered on 2 huge long-life mines in Canada that are now really becoming the heart and soul of the company.
So let's start with the Greenstone mine. The CEO, Darren Hall, said it himself, this mine is a key focus, and the progress is tangible. You can see it, you can feel it. After a long time of spending money to build it out, that engine is finally running, and you know what? It's starting to roar. And we're not talking about vague improvements here. They're getting into the nitty-gritty. They are optimizing everything from how they load the shovels to the design of the blasts to how the haul trucks get from point A to point B. See, this isn't just about moving more dirt. It's about being smarter, more efficient, and squeezing every last bit of value out of the operation. Now let's look at the second big piece of the puzzle, the Valentine mine. This timeline shows you just how close this is. We're not talking about a project for 2028. First ore is going into the plant this quarter. The first gold bar is expected right behind that, and by the start of next year, they're aiming for full capacity. This is real, tangible growth that's happening right now.
Okay, so let's zoom out for a second. These massive operational wins at the mines, they fit into a much bigger picture, a broader corporate strategy. And the way management describes it is simple, quality over quantity. And they're not just saying it, they're making some really smart moves to back it up.
They are absolutely sharpening their focus. They sold off some smaller assets in Nevada for a cool $115 million in cash. They closed their deal with Calibre Mining to add more scale. And then there's their Castle Mountain project in the US, which just got a huge green light. So what is this Fast 41 thing? Honestly, just think of it like an express pass for the permitting line at a theme park. It's a federal program that's designed to cut through red tape and speed up major projects. For Equinox, this is a massive advantage. It gives them a clearer and, more importantly, a faster path to building their next big mine in the United States.
Okay, so this all leads us to what is probably the single most important takeaway from this whole quarter. All of this hard work, the operational grind, the smart strategic moves, it's all been designed to do one thing, generate a ton of free cash flow.
And that's it, right? That's the question every single investor was asking during that call. You see all these pieces falling into place, but what does it actually mean for the company's bank account going forward? Well, management couldn't have been more direct. They said they are at a pivotal phase and they expect a material increase in cash flows starting right now in the second half of this year and then accelerating into 2026. This, right here, is the inflection point the market had been waiting for.
And it's not just about making more money. It's about being more profitable on every single ounce. As these new super-efficient Canadian mines start producing more and more of the company's gold, they project their overall costs could drop by $100 to $150 an ounce. And every single dollar of that drop goes straight to the bottom line.
So, what are they going to do with all this cash? Well, they've laid out a very clear three-step plan. Step 1, pay down debt, strengthen the balance sheet. Step 2, build up a big cash pile so they have what's called a net cash position. And Step 3, once the company is on solid footing, they can start thinking about returning that cash directly to shareholders through things like dividends or buybacks.
Which really just leaves us with one last big question to think about. You've got a massive earnings beat, you have two brand new cornerstone mines that are firing on all cylinders, and you have a crystal clear plan for what to do with the money. So you have to wonder, was this just one great quarter, or have we just watched Equinox Gold enter its golden era?